In this engaging video, Michael Saylor, a prominent figure in the cryptocurrency world, explains how Bitcoin will change the world and why you need to listen to him. With a strong background in engineering from MIT and extensive experience as a tech investor, Saylor brings a unique and authoritative perspective. He discusses Bitcoin's potential to empower individuals with property rights and economic sovereignty, emphasizing its transformative impact on the global financial landscape. This talk is a must-watch for anyone interested in understanding the future of digital currency and why Saylor's insights are crucial in navigating this new era. Don't forget to subscribe to stay updated on videos like this, as well as covering hot stocks that will give you the best returns. Please like the video to help our channel grow so we can keep making content like this.
Lex Friedman one got like 10 million views. Why do you think people care so much about what you have to say?
There's like 450 million people in the world that have crypto, some kind of crypto asset. Bitcoin is spreading virally. There's hundreds of millions of people that own Bitcoin. This is an idea whose time has come, and it's a fundamental idea. We have developed a technology that empowers humanity and empowers the individual. It provides property rights to 8 billion people. It provides freedom, economic sovereignty, and the promise of sovereignty and dignity of the individual to 8 billion people. And we do it with cryptography, semiconductors, and the internet. So it punches all the buttons, right? It's about technology, it's about freedom, it's about empowerment, and it's about money. And those are all interesting topics for people.
Why should people listen to what you have to say?
I think that everybody ought to do their own research and listen to a lot of different points of view. So I'm certainly not the only voice. My particular voice is that with the background of an engineer. I went to MIT and I studied aeronautical engineering and spaceship design. So I have an engineering background. I have a long, enthusiastic history as a tech investor. As an early investor in Amazon and Apple and Google and Facebook. I wrote a book about the impact of technology, especially mobile technology, on civilization and on the economy. That's based upon my studies at MIT. I studied science, technology, and society, and the history of science is another one of my degrees. And then when I saw the advent of the mobile phone, it became clear to me that mobile phones were going to dematerialize cameras and tape recording and entertainment and relationships and money and commerce and retail storefronts and newspapers and books. And when I thought about the dematerialization of all that, I thought the world's going to change. There are going to be these trillion-dollar companies like there are today, Apple and Amazon, Google, Microsoft. I thought, that's going to make a difference. I wrote that book back in 2010, published it in 2012. I rode that mobile wave for about a decade. And I did that while I was running a company I created. I created a company when I was 24 called MicroStrategy. In 1998, we came public, and MicroStrategy is MSTR. It's still in business, and I was the CEO for 30-something years. Now I'm the executive chairman. So I spent a career running a public company. Our company sells enterprise software to banks and governments and airlines and large corporations and most of the retailers in the world. So before I discovered Bitcoin, I had an engineering background, a tech investor background. I was a bit of an academic in the history of science. And I had a background in the real world running a software company that was multinational. And I had a background as a public company CEO. And along the way, I picked up lots of bruises as a tech entrepreneur. I picked up lots of wisdom, learning what it's like to do business everywhere in the world. And along comes 2020 and the pandemic crisis, and there's COVID, and there was lockdowns, and then the interest rates went to zero, and there was financial hysteria, and the world was turned upside down and split in half. You know, all of our office cultures, they all got thrown out the window, and we all went to remote work, and we did it like overnight. All of our prejudices and biases, well, we think we should do it this way, they got thrown out the window, and maybe we have to do it a different way. All of our thoughts about money and banking, it's like, okay, here's your money in the bank, it earns 0% interest. Well, what am I going to do? And by the way, we're inflating the currency and eventually everything's going to cost twice as much. Houses are going to go up in price and yet your money's going to earn zero. That causes people to open their mind to new ideas. So in my case, I approached this existential risk in 2020, running a publicly traded company. And we happened to have two things. We had about $500 million in cash, earning 0% interest. And we had a $500 million software business generating about $75 million in cash flow. And our stock was a bit more than $1 billion in value. So the marketplace put 1x multiple on our business and 1x multiple on the cash. And I looked at it. My first concern was, will the company survive the crisis? You know, in March, April, May of 2020, we were all worried about, you know, our lives, our family, our businesses, our business model. And once I realized that wasn't going away, my second thought was, how is it possible that every Main Street business is having the worst year of their life? Every restaurant, every bar, every gym, every yoga salon, everyone, you know, that shows up to work, not only are they not working, they're not allowed to work. And if you open up your gym, you know, people are getting arrested for opening up a gym to get healthy. So on one side, you have this crisis. Half the people in the world or half the businesses are having the worst year of their life. And then in the summer of 2020, all the Wall Street firms had the best year of their life. All the stocks doubled. All the real estate assets went through the roof. When we dropped the interest rate to zero, real estate property values double. You know, all of a sudden, you know, all the big tech companies are shooting through the sky and S&P is shooting through the sky. And I just saw this paradox. How is it possible that one part of society thinks everything's great and another part of society thinks this is the most awful thing? So we were worried a little bit about that, but really we thought, you know, $500 million is going to be worth $500 million in 4 years, except that you're going to need $1 billion to buy the same amount of stuff as you could buy with $500 million today. So we're destroying shareholder value to sit in our position. The market doesn't care about us. And on the other hand, we don't own anything that's benefiting from all this inflation and from these low interest rates. So we started looking around and, you know, in that year, my mind opened and I embraced a lot of new ideas. I embraced the idea of podcasting. I'd never done any podcasts until 2020. I embraced the idea of Zoom. I would have fired you in February if you wanted to do remote work, but by the end of March, it was mandatory. You know, so yeah, it's like 10 years or 20 years of innovation or evolution, you know, all coming in a week or 2 weeks. Then I thought, well, what am I going to do with this money? I either got to give it back to the shareholders, you know, and decapitalize. And if I decapitalize, I thought that's a fast death, right? Our company was looking at a fast death, a slow death, or do something new. And I wasn't interested in a fast death. The slow death didn't have a lot of appeal, just get chipped away at by big tech companies. And so it's kind of a desperate moment, a moment of truth where you have to make a decision and take a risk. And so we looked around and we said, well, what do we need right now? Well, we need a hard asset that is scarce, that people all want in the world. And we need to get on top of the next big tech trend. You know, like, is it digital relationships? Is it digital books? Is it digital photographs? Well, it's too late to jump on top of Apple, Amazon, and Google, and Facebook. You had to hit them and invest in them in 2010, 2012. I said, what's the next big thing? And I thought, what about Facebook for money? What if someone actually invented a bank for that 1 billion people, or in this case, 8 billion people needed, that ran on the internet, that actually had an asset which no government could debase, which every wealthy investor wants, which you could move at the speed of light, that you could program into an iPhone. What is this? Digital gold, digital capital, digital property. What if the next wave is the digital transformation of money, of property, of energy, of all these ideas? They weren't transformed in the first internet wave. And I looked around and I thought, well, that feels like crypto gold to me. And so what if I could create something that was better than gold? It had none of the defects of gold, and it offered the promise of sound money to 8 billion people. And then I could combine that with a digital network like Google, like Android or like iOS or like the internet. That struck me as being the next big idea. And so MicroStrategy became the first public company to buy Bitcoin. And we bought $250 million of Bitcoin in August of 2020, and no one had ever made such a large commitment to this scary, new, crazy crypto idea.
Were you worried about volatility at the time, that you could make that investment and have it drop by 80-90% in a year?
Yeah, I was worried about volatility, and the way that we dealt with that was we had 500 million in capital. I wasn't worried that it would drop and we would panic sell it. I was worried that it would drop and our shareholders would have a big issue with it and we might get sued. Right?
Yeah.
And so the way we dealt with it was we announced that we were going to do a $250 million stock buyback at a premium. We call it Dutch auction. And we paired it with a $250 million Bitcoin purchase. And we allowed all of our shareholders to get out. Like if you didn't buy into the Bitcoin strategy, you could tender your shares back to the company at a premium.
Mm-hmm.
That rotated our shareholder base, and we didn't have neutral or indifferent shareholders. We had all pro-Bitcoin shareholders.